up, everybody? Good morning. Welcome to Trading Live with Bubba. It is Tuesday, the 13th of February. Well, I mean, if you're on the update this morning, I said look for a little bit of a rally. You'd probably see it. And of course, the NASDAQ did rally back over 100 points, and it's now headed back south again. But of course, this is all to a hot CPI number, which, look, the government can continue to give us garbage numbers, which only tells you that the Fed cannot cut rates. Okay, if we're going to continue to get hot numbers, then how can the Fed possibly cut? This is something that, again, the whole rally was built on it. Now, I'm not telling you that we're going down. I'm not telling you that we're going to break down. I'm going to tell you the same as I tell you every week and every day is to just watch the market and find the levels. And again, when we just take a quick peek at what's going on, first of all, on the short-term charts, which we do our day trading off of, we had the big push down, found a bottom, and certainly you can see that this is kind of bottoming action here, and you got a little bit of a rally. So let's see where we go from here. We've now found a high that is lower than the high here. So now you've got some levels to kind of watch. Look at the S&P. The S&P could not make as big a rally back, okay, as well as the Dow and the Russell. Of course, the Dow and the Russell have been stronger. But again, as we look at the base picture, okay, at the core stocks, Apple. Okay, Apple is right on a key spot, 185. Okay, what is it going to do from here? Well, we'll see. Again, I think Apple is in a downtrend. I think Apple is 185 to 190. And as we've been saying, we'd like to sell call spreads up around 190, which worked out pretty well last week. Okay, now we got to see this kind of pivot area, 185, how it acts here. The first time the attempt down through it, it bounced off of it. So let's see what goes on. Amazon, okay, reached overbought conditions. Pull back down. Again, we said we'd like to be sellers at the 175 level. There it is. So, again, and this isn't going to be right every single time, okay? But there are certain mixes that you start to see in markets, overbought conditions at a big resistance level, bang, you usually get what you're looking for, okay? Coin, again, had the big overbought, then broke down, became oversold, came down to support at about 110. And pop right back up to 150. Now we're churning at 140. So you've got what you're trying to do is you're trying to identify the levels. So coin went from oversold to overbought in 3 days. Okay. So if you didn't catch the oversold conditions, maybe you caught the overbought conditions. And again, you're trying to right now on a longer term basis, like selling premium. Okay. You're looking to catch the top and bottom of the ranges by selling call spreads and put spreads. Okay. And again, when we get into trading futures, we do those on a much faster basis. But these are things that we're looking for. Okay. And these are things that we get opportunities out of. Okay. Meta reached a level. Now it's just in consolidation. So if I were looking at Meta at 450-ish, if it gets down that low, I would look to be a seller of put spreads. Again, you have to be patient enough in this business to wait for your levels. Okay. That is something that you have to remember is that you have to be patient enough to wait. Trying to outguess or outsmart or outtime the markets is never going to put you in the best position. You're always going to be chasing your tail if you don't wait. Google, okay, reached resistance, broke through. Now here we are. So I would suspect that right around here, around 145, is going to act as some support. Okay. Now, again, is 145 the area I'm looking to play in right now? No, because the overall market conditions are very slow. Look at the decline in volume each and every day. Okay. Now, you would think that with a sell-off as big as we're watching today, you would have some heavier volume. Well, you're not getting heavier volume. You're having a market that is really pretty much quiet, and we would call this selling very orderly right now. Okay, now it doesn't mean there won't be panic later, but if you look at the VIX, okay, you got a little bit of a pop in the VIX into some overbought conditions, but really, where are you? You have not breached or broken above, okay, 15, which is a key level. I think you're looking at between 13 and 15, and more than likely, the VIX will probably fail from here, which would mean you might trigger a little bit of a rally off of this big sell-off. Because remember, the sell-off started yesterday, okay, late yesterday. We saw the NASDAQ and the S&P break down late in the day. Okay. And of course, you can see here it was peaking and making a high and then closing lower on the day and lower again today. Now, this could be considered a potential key reversal. Now, again, I don't like to make major predictions. I do like to look at the market and say, hey, we're at the mean right now. We've had a little bit of a sell-off, which we assumed and we expected. In fact, on yesterday morning's update, I said maybe this is a temporary top. But again, we're not going to try to call the top. The trend right now is still kind of higher, and we need to see some action that will convince us that it's going lower. So as we go back and look at some of the things we watch, IWM, okay, it's getting clobbered. It's getting clobbered today. Okay, a big gap lower after it was extremely overbought. Okay, so again, this was another opportunity to sell some premium. Okay, and again, this is what we're always focusing on, is where are the opportunities, where do they come, and then what is the best way to play these opportunities. Now, again, I warn you, in these light volume markets, it's very challenging to try to get too involved, okay, and try to do too many things, because remember, you don't always have to be in the market, okay, as a trader. You're better off waiting for opportunities to observe, okay. NVIDIA, interesting. It's exploding higher into a down market, okay. So there you can see it found a support level. And again, these lines were drawn in from my previous stuff. So it's not like they just showed up because it was there. That was there ahead of time, okay. And I would say that, NVIDIA, if it reaches back up to the 760 area, okay, 750 area, I'd look to sell some call spreads. Now, just full disclosure, I'm 0 for my last 3 in NVIDIA, okay. So, and of course, the Qs are back and sold off to the mean at support. So the mean and the support are at the same level. This is a place that, if it comes back down here, we've already rallied quite a bit off of that area. If we come back down to the 425 area, I'd look to sell some put spreads here, right here at 430. Again, I think you're trying to guess. Hold on one second for me real quick. Okay, so anyways, at the end of the day, okay, you watch and you look for these levels. Square, okay, selling off a little bit. Not a total surprise. So now we would be looking for this to come back down to about 63. Okay, again, SPYs, 495 looks to be a relatively good support level, but we're still near the overbought condition. So again, your decision making when you make trades all comes down to what are the overall circumstances. So first of all, what is the longer term trend? Okay, where are my levels? And of course, is there any volume in participation here? And again, take a look at what's going on here. The volume is declining each and every day, and today looks no better. So why would I want to be and get overly involved here when I'm watching a very, very slow and a very, very challenging market and an atmosphere? Tesla, again, churning around, reached a peak, came back down. So there isn't a lot of trading to do right now on a longer term basis, because we're kind of in the middle of nowhere on a lot of the different stocks that we're watching. So now if we go back to, the potential day trading opportunities, okay, and this would be in the futures market. So now what are we looking for? Well, I'm looking to trade in this model, what we call the blow-off pattern, okay? So I'm looking to see if we get a straight spike up. So this is telling me there is a potential trade coming, okay? Now I need volume I would like to see volume surpass here. So if that volume on this bar, which has 2 minutes to go, gets through the top side here, and this continues to stay higher, then I'm going to look to be a seller, because we're going to go on the opposite side of the blow-off, okay? And that is something that we have to remember, that when traders feel that price and time is meaningless, and that's usually when you either see FOMO or panic, okay, then it means that we want to take advantage of that and take the opposite side of them. So now, as we continue to spike up here, okay, it looks like we're gonna get the volume we need. Now the question is, will the price hold? Because just because part one has happened does not yet mean that we have a trade. Okay, we still need a second part, which we'll get to as soon as I can confirm. Which I mean myself, I can confirm it, but I want you to see it happen, okay, as well. Okay, so this bar of volume needs to get through that line, which it should get through shortly in the next couple of seconds, I'm sure. Okay, and then we're going to take a look at, how do we take advantage. So there you go. You can see it's through it now. So I can look at this as a potential blow off bar. So now I'm going here, okay, and I'm looking for. This was not my position. I did not have a trade. I'm watching here, and I'm now looking for a red bar, okay, because this is now a 1 minute chart. So I'm looking for a red bar to be lower or red, okay, so that it would give me. So I'm going to say right now, if it's 83 or below when this bar closes the next 18 seconds, I'm going to take a trade. I'm going to short crude oil, okay. And now I have to also identify what my stop's going to be. And my stop's going to be at 78.54. Okay, that's my stop. So now I'm going to enter. Okay, so I'm now in. Okay, and I sold. Hold on, I tell you the price. Let me just get my stop in so I can make sure that's done. So I don't have to worry about panic. Okay, I sold at 77.80. Okay, I sold at 77.80. So now I've got multiples on. So if you use multiples, I want to try to get some off on the way down in case. So I'm going to work one at 70 and I'm going to work one at 60, okay, as an exit point to take some profit, but still stay in the trade, okay? Because if this trade works big, I want to be a participant in a trade that works big, okay? And that is something. So we're going to go back here. We've got that trade on, so I don't have to worry about that. So now I'm going to go watch. I can see that it's still continuing to go up. You can see the volume did close well above this. You can see that it did go straight up. So now it's a question of, is there any other trades that are potentially developing? And here, if you want to see what we're watching, the Dow, the Russell, the NASDAQ, the S&P, crude, notes, 10-year notes, gold, and the euro currency. Okay, those are the 8 that I'm watching, and those are pretty much the 8 best for liquidity and for trading on a short-term basis. Now there's more, but I mean, how many can I show you? I mean, I'm certainly capable of trading them all at one time, but I don't want to put anybody in jeopardy by having to try to trade or watch too many products, because it can get a little nerve-wracking if you're not used to it, plus the cash that becomes involved, right? So in the meantime, so our trader now, it's a small loser, but again, 3 ticks. To me, that's a margin of error. And I'm not worried about it. And you can see that everything else is fairly quiet. So basically, I can sit back now and wait, because again, I don't have to watch anything specifically. What I'm really watching for is, am I seeing a price spike either up or down, or a volume spike? Okay. If none of those events are occurring, then I have nothing to look at from a day trading perspective. Okay. If none of those events are occurring, I have nothing to look at on a day trading perspective. So I can just sit back. So I can actually sit back in my chair, relax. All I gotta do is take a peek. And again, since I'm using a 4-minute cycle, and it doesn't have to be 4, it can be 3, it can be 5, it can be 10. The longer the time frame that you use, the less trades you're going to have the opportunity to get. Okay, that's one of the things that I look at. So again, I use an odd time frame that others don't use, because I want to be in front of them if I get what I want. Okay, and right now the trade's a small loser. It's losing about $36 on the micros. Okay, on 4 micros, so that's about $9 a micro. Okay, but again, it's the money is not the issue here right now. Right now, it's the principle of what we're trading, and I'm in the trade, so it is what it is. It's I'm trading it myself. I don't give trades that I'm not willing to make myself. So I'm in the market, and again, it's I've got to stop in, so I don't have to worry about that side. It hasn't come down yet to fill any of my working orders. So I just sit in the meantime as I look at the rest. Nothing, 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 nothing. So the market is telling you that there's nothing to trade. Okay. So we don't have to be in a hurry. Remember, the key in this business is patience. Say hello to Molly for me, will you, Max? Anyways, so the key in this business is the patience to watch it. Okay. Not to be the most active. Okay. You should be active when the market says you should be active. And right now, the market is telling me that there's not much to do. Okay. I mean, you look at the NASDAQ. Okay. A, there's no volume, but B, you've now found and identified a range. Okay. Let's say in the NASDAQ, you're 1728 to 1770. Okay. You're now developing ranges in many of these products now. Okay. So now you're in that consolidation phase. Okay. So we sit back and we wait and we wait and we wait. And again, we don't have to do anything. That's the beautiful thing of day trading. Okay. When you have the power to make the decision and you have the mental fortitude to make the decision, okay, without exposing yourself. That's why we use credit spreads and we take longer term trades. Now, when we get some real trading, in the future, when it gets busy at some point, and it will, then we'll make even more aggressive trades. But again, you have to be flexible enough to adjust yourself around the market, okay, so that you can take what the market is going to give you. Now, we're getting very close to potentially getting filled on part of our order that we took as a trade, okay, and it's got a chance. It is profitable right now, but it's got a chance to get me out, okay, and then let me adjust my stop. Now, it hasn't gotten there yet, okay. We're right about, I sold at 80, and we're at 78. If it's a big contract you're trading, you're up $20. I got 4 micros, so I'm up $8. I'm rich. I can't even afford to go to McDonald's, okay. But again, we're going to watch it and wait. We got a couple more minutes here, and if I leave, I'll give you instructions if you did take the trade of how to get out of it. But hopefully, the easy thing will happen, and it'll come down to 70 so that I can get out a part of it and move my stop to break even, and then you can do whatever you want with it. Once you get a profit and once you get out a part of your trade, okay, then you can play it however you want. The biggest thing you want to do is eliminate the risk and the exposure, okay? And then from that point on, you want to play the chart, but give yourself as much of an opportunity to make as much money as you can, okay? Because you don't know how far it can go in your favor, okay? And so we haven't got there yet, so we're still waiting. Now, I can certainly close right now and say, it's not a good trade, okay? Or, and break even, or I can wait. I'm going to wait myself, okay? I'm going to let it trade, okay? I'm going to see if it'll give me. Now, again, I'm getting closer with each and every minute that passes by that it doesn't do what I want it to do, which means it has to come down, and it should come down. In all reality, it should come down to 70 regardless. Okay, now it may not, but I'm getting to the point that with every passing minute, I'm getting closer saying, you know what? I'm going to close this trade, take the small profit, take the break even, whatever it happens to be, because again, the reason that I got into this trade is now over. Okay, it's now past that time because it should have reacted faster. It should have created some sort of a V shape. Okay, it doesn't have to be that fast or that dramatic, but that's kind of what we're looking for. So in the meantime, just remember, you don't have to be aggressive. You can be aggressive when the markets are giving you the aggression, the ability to be aggressive. Okay, and you can be passive when the markets want you to be passive. Right now, the markets are telling you not to be too aggressive because you're going to get it stuck up or a place where you don't want it. In the meantime, right now, if for you that don't know that aren't familiar with this type of trading, I would take the break even and get out. Okay, I'm going to hold myself and try to get something out of it, but it is going against us now. So look to get break even, and I will see you back here tomorrow with an update, but as of course on Thursday with the full show. Have a great day, everybody. Thanks so much. We'll see you later. Trading Live with Bubba.